Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Wednesday, it's the 5th of July. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address rshaw@fxcm.com. If you need to contact me, that's the address to use. All right, just going to bring up our disclaimers. I'll keep this on screen for a few moments. Good morning, Zanetta. Thank you very much for joining the webinar. It's a pleasure to have you as always. Thank you very much for everyone that has signed in this morning. All right, I'm just going to bring up our commentaries disclaimer. Okay, and just our references, MarketScope 2 and TradingView. Let's go through to MarketScope. So similar analysis to what we've been doing this the first 2 days of this week, and the reason is it's been a very slow week. Okay, it's a very slow week. Today, what's happening is there is going to be the release of the Fed minutes. That's going to be later this evening. Okay, so we shall see if there is a hawkish tilt to them. Hello, Antonine. Nice to have you on the webinar. Thank you for joining. All right, we're looking at the US dollar. I think that we're all very familiar with this chart, but I think it's the important chart to start the analysis off with, and that is it's not trending, it's moving sideways. Take a look at this week. This week's a very small candle. There's been no volatility this week. Very quiet week. So if there's no volatility this week, it makes life for traders much more difficult. Okay, we're moving in that symmetrical triangle. What we're trying to do is we're trying to assess some sort of directional bias. At the moment, I don't see one. The 30-week exponential moving average moving laterally. So that puts us in a very difficult position because it means that the volatility is smaller, it's narrower. If we go through to our daily chart, okay, perhaps a modicum of support. What I mean by that? Well, just the last 3 days, we trying desperately, or the dollar's trying desperately to maintain its zone 1 bullish position on the daily, perhaps getting some sort of support when the Fed minutes get released. We're going to have to wait and see if that is the case. We also got the non-farm payrolls coming out on Friday, and we're going to be doing a live trade, okay, on a live account, and I invite you all to join me, and I'm putting the link for that in the chat. If you'd like to join, you're certainly most welcome. Just go ahead and click on the registration link, and we'll see you then on Friday. The dollar to me is an issue. The issue, it's lackadaisical, is moving sideways, and because it's moving sideways, well, it's going to influence other currency pairs. Let's go into the other currency pairs and see what's happening. Remember, dollar volatility narrow. Let's go through to Euro US dollar. Take a look where Euro US dollar is sitting in terms of the daily. It is in no man's land. It's between the two blue bands. Okay, that is the neutral area. You can see that the RSI has pulled back all the way to 50. What is 50? 50 is neutral for the RSI. So just low volatility. That low volatility, no good for traders. Traders thrive on volatility. So the fact that we got the dollar moving sideways, well, you can see that's filtered through to Euro US dollar. Let's just go through to the weekly, see what kind of a range we're getting on this weekly candle. Okay, take a look at this weekly candle right here. There's nothing to it. It's a very small, tiny candle. No volatility. Some bulls have tried to take euro up, some bears have tried to take euro down. Neither has succeeded. We're pretty flat for the week. Okay, let's take a look at a few others. This is a theme, unfortunately, that is running through the markets. We're waiting for that volatility breakout. Let's go through to cable. Let's see what's happening on the pound US dollar pair. Okay, and the theme continues. Okay, so you can see just that small candlestick, no volatility, slight up shadow, slight lower tail, bulls trying to take price up, not by much, bears trying to take price down, not by much, both failing. We're flat for the week. Okay, let's go through to our daily chart. We're trading in no man's land. So you can see this thin volatility is running right through the Forex pairs that we are looking at. All right, let's change the pace slightly. Let's go through to gold. Gold, when we looked at it yesterday, perhaps showing a little bit more volatility. Let's see if that's the case. Okay. Gold in no man's land again. It's gone through to the between the two blues. That's the neutral area. And if we take a look at the weekly, okay, what I've got here with the weekly is just one leg. I've got a reference peak, I've got a reference trough. I don't have anything else to work with, so I can't do any trend analysis. Take a look at this week's range. Nothing in it. Okay, again, very small candle, no volatility. So the lack of volatility just plaguing us. It's no surprise. We've had a very thin market because of the Independence Day holiday. Things potentially hotting up today and moving into that non-farm payroll towards the end of the week. And if there's going to be a hawkish spin on the FOMC minutes, if there's going to be a surprise to the upside on the non-farm payroll, perhaps dollar getting some sort of boost there, but that's what the market's waiting for. It's almost as if the market has paused and is waiting. So the currency markets seem very slow at the moment. Let's just change the pace. Let's take a look at the risk markets. Let's take a look at the stock markets. We'll start off with the DAX. So we'll start off with the European side of the market. Let's bring up the DAX and see if there is any opportunities that we can take advantage of there. Now, a little bit more volatility here. When I say a little bit more volatility, that's exactly what I mean. Just a tiny bit more. It's still a very short candlestick. It's an inside period. It's within the range of last week's candle, all inside last week's candle. The bears haven't had the fortitude to take price below last week's low. The bulls haven't taken the strength to take price past last week's high. We're completely inside of last week's range. Okay, let's take a look at the daily chart, see where we are tracking there. All right, it's no man's land. It is slipping. It is slipping and perhaps getting some sort of bias, some sort of directional bias. If it closes in zone 3 is between the lower blue and the lower red, then perhaps a bearish spin attaching itself to DAX. I think that it's a very difficult day for trading again because we don't have the close. We don't have the close in zone 3 yet, but we'll know at the end of trade today if we are sitting in zone 3. Perhaps a little bit of slip in the RSI, but again, tiny bit of slip. It's near 50. It's near neutral. We haven't really sunk below that 50 with any sort of force. So I'm tending to think that the neutrality even extends into the DAX here, and we have to be very careful when we're trading neutral areas because the directional bias isn't there. Let's just go down to the hourly here. I'd like to see what the hourly is doing on the DAX, just to see if there is any sort of timing opportunity. So going down to the DAX H1, let's see what, all right. This is interesting. Let's just clear up the line studies here. So going to daily, it has slipped from the upper boundary, the upper blue, down to the lower blue. So there has been, over the last 3 days, movement between the neutral areas. It does have that bearishness attached to it. So you can see that the on the hourly EMAs are in bearish mode, and the stochastic here is in the lower quintile. There's no such thing as oversold or overbought on a stochastic. That's not the way the mathematics of the indicator works. What we have here is a momentum push to the downside. You can see that there is a big long red candle pushing down here. If we carry on with the angle and separation of the EMAs, and if we get the stochastic maintaining in that lower quintile, then that S3 pivot potentially comes into play. Then that S3 pivot potentially comes into play. So let's just reiterate what we are saying about the DAX. Taking a look at the weekly, the volatility has been okay. Out of all of the instruments we've looked, the volatility, the maximum volatility, which is mediocre, is attached to DAX. It's still in the neutral area, okay? There's no real directional bias on the daily chart. There is some pressure on the hourly, but because of the lack of the higher time frame trends, there may be some difficulty with the DAX. So if you put this on your watch list, just beware. Beware that the upper time frames don't have that directional bias, they don't have that volatility attachment to them. All right, I want to take a look at DAX because I think there is some analysis to be done on the, not on the DAX, I beg your pardon. I want to bring up the NASDAQ because I think there is some analysis to be done on the NASDAQ. So let's just bring up the NAS 100. Okay, and let's do a top-down analysis on the NAS 100. And the NASDAQ has had a superb first half of 2023. It's up about 37% over the first 6 months. That's remarkable. And it's probably the best first 6 months that it's had in 40 years. So there's something to be said about that. And the story that's really driving the NASDAQ is the story of artificial intelligence. But on a technical basis, it's overbought. And I've been looking at this very carefully. It is a very tricky overbought condition because it's on the weekly chart. Weekly charts are, the timing mechanism on weekly charts are difficult because when the overbought condition corrects, it can correct this week, it could correct next week, it could correct in 2 weeks or 3 weeks time. Timing here becomes quite tricky. So we are overbought, and I think that there has to be some sort of correction on the NASDAQ. And I think that any correction on the NASDAQ potentially sets up the next higher trough. And if it sets up the next higher trough, that's where the real opportunity comes in. But it really depends on when we get this pullback on the NASDAQ. Okay. NASDAQ's also had a very quiet week. It's also had a very quiet week. Understandable. Okay. Independence Day, public holiday. Potentially there is going to be more liquidity, more give in the indexes for the next 3 days. Let's just go to the daily chart here, and what I'm looking for is actually perhaps a lower peak to come in here. If there is an overbought condition, perhaps the clue to that would be a lower peak. So let's just keep a lookout to see if a lower peak comes in and if it slips back into zone 2, which would be the neutral area. Going down to the hourly chart here, there is some negativity that's starting to set itself up into the NASDAQ, and you can see that the EMAs have shown a cross to the downside, what technical analysts call a dead cross. And if you take a look, the stochastic has crossed over to the downside as well. So NASDAQ starting to show some slip here. And if it goes down into that lower quintile and holds, okay, then we're potentially getting the NASDAQ to move to the downside. It really depends if we get into that lower quintile and hold. Remember, the upper quintile, the lower quintile of stochastics where the magic happens. Here, we had a movement into the upper quintile where it held. We had a beautiful swing over there. Okay, so the idea here is there going to be a slip into the lower quintile, and is that lower quintile going to hold? All right, that's as far as I want to go this morning. If there's any questions, go ahead and type those questions in. Just want to remind everyone we're going to do a live trade on Friday. That's for the non-farm payroll. And then in the next few minutes, at the top of the hour, we're going to go on to our crypto minutes, and we'll discuss Bitcoin then. All right, guys, nothing coming in here. I'm going to wrap up at this point, and I shall see you in the next webinar, which will be the crypto minute. Thank you very much, guys.